Hey, everybody. Chuck Barone here. It is Thursday, March the 21st, 2024. And this crazy world we're living in just keeps on being crazy. God almighty. So, we got a lot of stuff to talk about today. So, I don't want to spend too much time in the weeds here. Before we get rolling, though, let me take a second. Welcome everybody to the show as always. And thank you guys for your support. We appreciate you guys being here. I see so many of you guys day after day watching the show. I can't tell you guys how much we appreciate that. All right, so let's talk about the world of finance and these markets we're dealing with here. God, guys, it's just bananas right now. So we know Powell was out yesterday. We know the market was loving his message. We're going to get 3 rate cuts this year, even though I talked yesterday about how I'm not exactly seeing how they're going to pull that off. But anyway, the market's continuing today to just gobble it up like it's just wonderful, fabulous news and everything's perfect. All 3 indexes finishing at record highs today. All 3. Dow Jones up 269 points, sitting at 39,781, new record. NASDAQ up 32, now at 16,401, new record. S&P 500 up 16 points, 5,241, also a new record. So the stock market as high as it's ever been. I don't know, guys. Do you really feel like every market should be at a record high right now? Does it really feel to you like the economy is going that great? And this whole idea of rate cuts, it's such a mixed up thing right now because rates are high and everybody hates it. Okay, everybody hates it. So they want rates to come down. And as I've been saying on this show many, many, many times, the Federal Reserve, now I should add a typically in here, okay? In most cases, the Federal Reserve isn't just going to cut rates because we want them to. They need a reason to cut rates, just like they needed a reason to raise rates as much as they have, right? Do you see that coming? Okay, do you see like a recession coming? Do you see a big drop in employment? You see lots of layoffs coming where nobody's getting jobs? Because that's usually what it takes for the Fed to cut rates, right? Now, if that does happen, let's just say it does, okay? And how does that then, so the Fed cuts rates, great. We still got a recession. How does that lend itself to record highs on the stock market? Now, I know I've been pretty bearish for a long time, and that's part of my naturally conservative, as far as investments go, conservative nature about taking care of your money and, trying to minimize risk while maximizing what you can gain from those investments. But this is not making much sense to me. Now, we're going to talk more about that coming up here a little bit later in the show. Bond market today, kind of a mixed market. 10-year unchanged, 4.27% for the 10-year. The 2-year up 4 basis points. So the 2-year bond selling off a little bit today, now sitting at 4.64%. The inversion's still there. I'm going to talk about that a little bit too. It's a brand new record now. The longest time the yield curve has ever been inverted. This is breaking a record from back in 1978. Okay. Now here's the deal, guys. In 78, it was inverted for a real long time, and we know what kind of recession that led to. The recession that got Jimmy Carter kicked out of office, the recession that got Ronald Reagan elected president and the whole world changing. So, okay, how does that lend itself to record stock prices? It's bananas. The dollar today. Okay, so everybody's talking rate cuts, right? Dollar been kind of going down because as rates get lower, the dollar gets weaker. But guess what? Dollar up today, 73 basis points. Back up over 104, 104.03 on the index. So the dollar's strengthening. Okay, great. Talk about mixed signals here, guys, right? Metals today, precious metals. Gold comes down a little bit, down $5.30. $2,181.80, close to record highs. I've read analysis today on a Barone's article. They're saying with central bank buying and everything else involved with gold, you're going to see gold 2,300 the second half of this year. Silver falls today 83 cents. I'm guessing that's some serious profit taking there. Still sitting $24.69, trying to consolidate strength above $25. This is part of the process. You have to blow out the weaker players. That's what silver's in the process of doing. Oil today falls, minus 37, down 37 cents, not very much, but sitting at $80.90 per barrel. So now it's kind of, looks like it might have peaked out. We'll see. I've been telling you guys, my gut's telling me oil wants to trade lower. Even though we've had this big spike up, I still want to believe that it wants to trade lower, and I believe it will. Bitcoin today is selling off, down $1,795, sitting at $65,464. Still a very good, strong number for Bitcoin. You know, things going just fine there. I was reading, they said that ETF withdrawals, the players in the Bitcoin ETF, Blackstone's ETF at least, really getting in and out of the market. You know, riding highs, taking profits. So they're zipping in and out of the market. This tells me it's probably more professional traders than it is, you know, us in this market. But it's nice to see that ETF actually functioning and working well, whether it drives prices up or down. All right, so you saw the headline today. You got S&P 500, stock markets at record highs. You have gold near a record high. I don't know how you can have both at the same time here, guys. It just does not make sense to me here, okay? Can they both be at record highs at the same time? I don't know. I don't think so. I mean, you would think with gold at all-time highs, the stock market would be declining and be in a lot of trouble. Typically, gold usually rises on big dollar weakness. Dollar weakness not great for the stock market typically. If the dollar is weaker, how does that help stocks? If gold's stronger, how does that help stocks? Now, imports coming into the country would be priced a little bit higher, right? Imports get more expensive. That's inflationary. Our exports would be cheaper overseas, but that's kind of, that's kind of lame because what do we really export anymore besides raw materials that are assembled in other places, then re-imported back into the country by our own frickin' companies here? The stock market's rising right now on this rate cut idea. I talked about that already in the show. The Fed needs a reason to cut rates. The reasons are not usually positive for the stock market, right? So, how is all of this? I don't get it, guys. How is all of this playing out where dollar rallying, gold at record highs, silver close to record highs? This is negative typically for the stock market. How do you have both at record highs? It's just the craziest thing I've ever seen. We know we got this commercial real estate collapse coming. We know we're going to have big pressure on banks. We know we have an election year coming. Now, markets are usually up during election years, but with the election year really throwing a lot of question marks into the Fed strategy because they don't want to be seen as playing favorites in this election. So I'm telling you, if we get a cut in June, which I have my doubts, it's going to be really difficult for them to cut again before the election without being accused of playing favorites, okay? So I got to see how they fit three in here. The stock market goes up because earnings go up. That's how the market works. Of course, stock buybacks kind of skew those earnings a little bit. But this is a fascinating scenario we have playing out here. Now we got the tug of war between, the gold people and, more bearish sentiment, and the stock people and more bullish. We're going to be here to bring you guys all the gory, bloody details on this because this is going to be a fight that's going to play out. It's going to be fascinating to see which way this all goes. A couple quick hitters today. You guys, I'm sure, saw that The Department of Justice today came out, sued Apple on antitrust charges about their app store and the way their app store, basically they become a partner of everybody that sells on the app store. You have to sell on the app store to be working with Apple products. Apple's 65% of the smartphone market here in the USA. And I can tell you right now, I love Apple products, use them like crazy, but Apple is very rude about making their products compatible with other brand products. For example, I was using the iPod Pro. Well, they're real nice for phone conversations and talking to people, but they're the worst crappy for music. I'm a guy that listens to music with the earbuds in, and Apple products, while great, like I said, for conversation, not so great for music. The bottom end is horrible. So I went and bought a set of Bose AirPods. Well, what a pain in the butt it was making all of that work super easy with my Apple iPhone, my iPad, my iWatch, and everything else. So I'm familiar with that myself, watching as I was trying to do a video on my iPad live, and just did not want to cooperate with Google. So it was, so I get it why Apple's going to get this, and I think they're going to lose. Job market, we got jobs today coming in still super good, right? We were expecting 218,000 claims. They got 210,000. We'll see. I think next week we're going to get jobs report for the month. We'll see where that comes in. Fascinating stuff. Okay, so the economy still continues to look like it's doing very well. I say, how does that work for rate cuts? Okay. The inverted yield curve, I mentioned it when I was talking about bonds. Now a record. It's been inverted for almost 2 years, guys. It inverted in June of 2022, early June. And here we are now, almost April, March of 2024, and it's still inverted. We haven't had the recession yet, but I got a feeling that if it continues to stay inverted, it's going to do it till we get that recession. Fascinating, fascinating stuff. Vanguard comes out today, says no rate cuts this year. Their analysis, very much like what I was saying, the Fed's just not going to really have a chance to do it. The economic data are going to be too strong before the election going to skew things, no rate cuts. At the same time, Blackstone comes out and their analysis says first rate cut coming in June. So now you have these two massive giants completely conflicting ideas on what's going to happen. Is this the most confusing market you've ever seen? Because I got to say, I've been following stocks since probably 82, and I've never seen it as weird and crazy as this is. Bad news on commercial real estate. We've been following that for you guys. Listen to this, guys. Commercial real estate continues to fall. Office space is now down roughly 35% from its peak. So office space, they can't fill them. They said that 25% of the workforce now works from home or some type of hybrid. The demand for office space not there. Landlords having a very difficult time. They're expecting default rates over 10% coming soon. That's going to be a big problem for mid-sized banks. Leading indicators, rising data coming in today, rising for the first time in 2 years. So for 2 years, the economic indicators have been pointing downward, downward, downward. We're going to get a recession. If I add that up with the inverted yield curve, we all believed the recession was coming. Lo and behold, economic indicators turning positive now. I guess consumers feeling a little bit better. Now we'll see with everything that comes out tomorrow. Tomorrow's going to be a huge day. We're going to get PMI reports for purchasing managers. We're going to see how businesses are feeling about it. We're going to get the University of Michigan tomorrow. So we're going to get a lot of data that's going to tell us where consumers are at, where businesses and manufacturing is at in this country. I'm guessing it'll be massively conflicting because that just seems to be the way things are now. There's no clear picture in my mind of where things are going. And that leads me to be, again, cautious with my investing, cautious with the way I deal with my money, because any kind of setback, you don't want to get caught in a trap where you're okay, well, you're going to take the plunge and now boom, everything turns around on you. Anyway, guys, that's it for the day. As always, we really appreciate your guys' support. Hit me up. Please hit the like button if you can. It changes the algorithm around, gets our video out in front of a few more people. Hit me up in the comments with your questions, something funny, a joke, or just to say hello. I'll be on there today as well. We'll be back tomorrow to wrap up this funky, crazy week. Until then, guys, take care. Thanks.